Welcome to the Cashflow Project podcast. Are you looking to better your financial situation by increasing your cash flow? Too busy to hunt for real estate deals or don't know where to start? Then you're in the right spot. Join us as we dive in and talk about investing for cash flow using multifamily real estate.
Welcome to the Cashflow Project podcast. I'm your host, Steve Fieros with Tri-City Equity Group. Today, we've got Kris Morin on the show. Kris, bringing more than 12 years of real estate investing experience, has been sought after as a mentor and coach for high-profile business professionals. It's one of the founding members of Three Peaks Capital. Kris's primary responsibilities for the group include investment strategy, business development through strategic alliances, and educating and attracting new equity and debt investors. Prior to Three Peaks, Kris spent more than a decade working through progressive leadership roles at some of the top advisory consulting firms in the world, including Accenture. Kris was accountable for helping members of the Fortune 500 to perform competitive assessments and define strategies that would enable them to take advantage of their competitive strengths, exploit industry weaknesses, and achieve operational efficiencies while scaling globally. Today, Kris is on a mission to help other executives and high-income professionals accelerate their wealth accumulation, move away from the dangers of being all in on the stock market, and achieve the retirement they dream. Hey, Kris, welcome to the show.
I'm glad to be here, Steve. Thanks for having me on.
Yeah, no, I appreciate you hopping on and sharing your wisdom over those years of experience and helping our listeners and selfishly me also get better. But no, I really appreciate you taking some time out and sharing with us.
Excited to be here.
Yeah, so those were our listeners that may not be familiar with you or had the pleasure of maybe running into you at a meetup or having a conversation with you. Give us a little bit of your background now. How did you get started in real estate? Were you always raising capital? Give us some of your story.
Yeah. So it actually goes back to 2009, like right at the depths of the recession. Poor time for the economy, supreme prime opportunity for real estate investors. I would say that me jumping into real estate, as much as I like to think I'm a smart guy, it wasn't me saying, hey, there's this huge opportunity, I'm going all in now. It was just more of a matter of coincidence and timing. But I was a young consultant at Accenture. I was growing in the ranks pretty quickly. And I was kind of having I was at this intersection in my life. Funny to think I was at any kind of an intersection. I was like 27 years old, but I felt like I was having a midlife crisis because for anybody who knows that lifestyle, I was on a plane 50 weeks out of the year. I mean, I worked holidays. I was very busy, but I was a young millennial. I wanted to be a CEO someday, right? I wanted to make as much money as possible and I wanted to retire rich. And I thought I was going to do that by making more money, becoming more senior in a big company. And I realized really quickly, I think where a lot of people get eventually is that that's not all it's cracked up to be. I was really just burning out and I was kind of sacrificing my life in the process. And so I was like, man, and I realized like I was making a lot more money than when I originally started. We're not even going to talk about my teacher. I was a high school science teacher at one point. But so by all means, I was making it extremely much better. But I realized I wasn't ever going to save my way into retirement. And right about the same time, I watched the Great Recession rip pretty much half of some people's net worth right out from underneath them. And I thought, man, I'm already burning out, and this idea of working harder for longer was kind of freaking me out. And just to know that I could get to that point and then have it all ripped away, it was terrifying, but I also knew it was a wake-up call. And I knew I had a lot of time ahead of me, so I had to think differently about investing and preparing for retirement. So I set off in this learning journey to go insert myself in circles of wealthy people. And that was a combination of real estate events, business masterminds, and just hanging out at coffee shops where wealthy people hang out in Connecticut. And ultimately, I realized all these guys are putting their money into private equity, traditional private equity and real estate private equity. And I was like, okay, that's what I'm going to do. And so that was kind of the impetus for jumping into real estate. And like most folks, when you start to explore that, you start to do your research, there's sort of this blueprint out there or this group thing that says, hey, you got to go flip houses, make money, and then you buy multifamily and you kind of like graduate your way out, right? I'll spare you all the details. Lucky for me, I was business savvy. I've got a strength at building teams and aligning them to a vision. I was flipping houses in multiple states because I was traveling so much. I said, hey, I'm getting on a plane on Monday and going to Detroit. Why am I not building a team and doing real estate deals in Detroit, right? And coming home on the weekend and doing them in Connecticut. So I followed this blueprint. And to this day, I wish I just started a multifamily. I tell everybody, don't think that that's the route you have to go. Actually, flipping houses is tremendously more risky than buying multifamily. Like everything about it is a big guessing game. I'm going to buy this house at this price and the scope of work is going to remain in this budget and I'm going to get it done in this time. I'm going to sell it for this price. It's all speculation. Versus multifamily, I'm buying a business that's been making money for the last 50 years. It's going to make money for the next 50 years. It's much more secure. But I'll shorten it a little bit, say that I was successful. I was growing my career, continuing to travel. And fast forward 2015, I'm just like burning out again, right? I'm making all this money between real estate and my job. But I remember getting off the phone in a hotel room in Richmond, Virginia with a Connecticut contractor. And I thought, this guy's making my life hell. This is not passive income. This isn't why I got into real estate. Like, I don't even want to do this real estate thing anymore. Literally shut my business down, finished off the projects, took a year off, couldn't stay out forever. Right. And so I came back, and that's when I started buying multifamily. So it's been a decade long journey. And since 2015, I've basically have been buying and trading multifamily assets from 2 units up through 20 units, now up through 50 to 60 units at a time. But I would say that's kind of the journey from a 50,000 foot view. And I spent a lot of time learning on my own dollar, building my own portfolio first, managing dozens up to 100 units on my own, long before ever borrowing investor capital and moving into the middle market space. And so I bring a lot of experience to the table. And I think it's one of the things that has allowed me to perform so well in the commercial space, in the syndication space today.
Yeah, no, that's awesome. Thank you for sharing that. You've definitely done a lot in a short period of time. And you mentioned earlier, just to kind of go over some of the stuff that you're sharing there, you're kind of I'm thankful for you. And I'm sure you can probably look back, even though I'm sure it was painful at the time, for you to have kind of that reevaluation, that kind of that midlife crisis at such a young age. Because unfortunately, I mean, you and I both know this. You talk to having these conversations with people, and they're well into their 40s and 50s, or before they have kind of this epiphany, right? This revelation of like, crap, I don't know that this works. And they've already spent a lot of their working years and a big chunk of their life committed to corporate America and committed to the dream that our parents and maybe previous generations have been able to take advantage of and whatnot. And it's like, okay, and that still worked for some people, but it's getting a smaller and smaller segment that actually does play out for. So like I said, I'm sure that's tough going through it in the moment, but looking back, I no doubt that was a pivotal time, and it happened to you early, right? So that's huge. And talking to you and sharing your story too. And I've heard this story so many times. You talked about the journey from, let's say, residential to commercial. Everybody kind of gets sold on that dream, right? They're watching HGTV and it's flipping and cool, right? Just like you said, right? Like everybody's on ramp, just wholesaling or flipping, because it's like, well, that's where you start, right? And it's like, well, it didn't have to be that way. If you're already, let's say you are an established professional, you've been in your career, you're a doctor or a well-paid somebody in management or something, and you're going to go out and start flipping. Like, is that the right fit for your personality? Did you ever stop to think about that there may be a fit for you? But again, because everybody's thought process, well, yeah, I got to go through this journey of residential to commercial before you can kind of graduate. And it's like, no, you don't have to do that. It's another job. I mean, and you found that out too, right?
Oh yeah, it's another job. It really is. And I always called it a babysitting job. These contractors, every once in a while you get a good team, but they're not around forever. And I'll tell you, I think for a lot of folks too, they start to think, well, smaller means less risk. Like, I talk to people all the time and say, Kris, I'm going to do this multifamily thing. I'm going to buy a duplex. I'm like, don't do that. Right. And or they say, I'm going to live in one of the units. I'm like, okay, so you're basically not profiting. And now you've got two of everything: furnaces, refrigerators, air conditioning systems, you name it. And they're both coming out of your pocket because you're not profiting. And they're like, oh yeah, I didn't really think about it that way. But they think less is less risky, and it's generally the opposite. But then I think they also think about the barrier, the capital, the entry into the market, the amount of capital they need to put down, and they don't think they can secure a loan, and they don't realize it's easier to get a loan from a bank to buy 50 units than it is to buy 2 units at the end of the day. They're qualifying the 2 units based on you and your personal income. They're qualifying the 50 units based on the 50 units. It's a business. Can it run itself? And so it's just, there's so many myths out there that need to be busted. And it's just, multifamily is just so powerful and so much easier than people ever realize.
Yeah, because you get all the benefits of scale, right? Kris is alluding to that there too. Like, so he mentioned the example of the 2 units versus the 50 units. Well, guess what, guys? 50 units, you're usually going a little bit vertical. Maybe you got a 2-story, maybe a 3-story. So maybe that 50 units spread out over 4 buildings or so, let's say. Well, okay, well, how much is my duplex? Do I have one roof for that duplex for the 2 units? Yep. Okay. Well, how many roofs do I have for a 50 unit? It's not that many more. And so you start to benefit from economies of scale, right? So it's like, well, hey, if I've got to get a roofer out, is it going to be more expensive to do the complex? Yes, of course, it will be just a bigger footprint. But I have so many more units, so much more income to help kind of spread that cost out. All the CapEx and all the maintenance and all that stuff, it gets spread out. You've got so many more. I always envision like a dog sled, right? Or a number of horses like pulling you've got so many more animals like help to pull the whole thing along versus just one tenant. If you get one tenant that you get a duplex, they trash your unit. Well, there goes half of your income. And they
Yeah. That
trash
dog
it.
sled's not moving. Yeah.
But no, I think you're exactly right. You have so much more protection going bigger, but again, that's a self-limiting kind of belief. So you kind of made that conscious decision. And how did you find out, like, let's say these different places you mentioned, being around, putting yourself into rooms with people who had a bigger kind of vision or maybe had more experience? How did you find that out? Where were the paths that you kind of took to find out, oh, how do I get myself around London here? Like,
Yeah. Well, I think for me, the immediately my mind goes, every state, every city, every town has some real estate investors association meeting. That's always kind of the best place to start. There, everybody from brand new beginners in there to the really serious players in your area. Well, they don't tend to frequent as much. It's usually more of the people who are looking to learn, but that's where you're going to go find mentors and just start to get some of that education in that direction. It's the best place to start. Folks are usually very charitable with their time. And if you bumped into me in that crowd, for example, I'd be more than happy to say, listen, these are the folks you need to go talk to. Let's grab coffee and like start to pencil out a strategy that makes sense for you and your goals. Right. And so that's always the best place to start. For me, I always try to, even to this day, I try to find groups or masterminds. You can either do it through Facebook or Meetup or just asking around, like ask a local attorney, like, where do you go to get advice or vent at the end of the day? And they might say, oh, I'm a part of this group. Like you never would have found anywhere else. And I did things like that. I just asked business owners, do you have your own little mastermind groups where you guys get together and really kind of figure things out? And so I like to plug myself into groups where it's not all real estate investors. There's lots of business owners, and I'm the only one who's particularly into real estate. It really opens your horizons. But two, those people become your investors at the end of the day. So that's really how I did it, and it worked out well. They ended up becoming mentors for me and really helping out in many ways over the years.
yeah, no, and that's excellent advice. And guys, of course, like you're getting a start here. If you're listening to the both of us, like having this conversation, okay, cool. You can do that. We have more tools than ever before to start learning virtually. You can learn from our mistakes, our lessons along the journey. This will help to fast track you. But then locally, you'd absolutely want to get plugged in, meet people in person, start shaking hands. And I understand, I can already hear, and I've had these conversations with, well, Steve, I'm not like Kris. I'm not, he seems like a likable guy and can have a good conversation and go, wow, that's not me. Okay, well, that's all right. Get comfortable with being uncomfortable. If you want to have the things that you have never been able to experience before, and that your circle is not experiencing, you're gonna have to do some things that are gonna be outside of your comfort zone, your normal day to day.
That's right.
At the end of the world, you can go have a conversation. And I do like that you pointed out that this has been in my experience too. I feel like successful people, and maybe I definitely didn't always have this mindset of, well, they're not going to want to share with me. They've already achieved success. Why would they want to share with me? And it's like, you'd be surprised at how forthcoming successful people can be. The more successful you get, I feel like people more understand it's a team sport. It's not, I'm not a solo operator. I don't have to do everything by myself. In fact, I need help. And you might have a skill set that we can both benefit from, and there is something I can provide to you. So you mentioned that. I think it's been my experience that people are very forthcoming typically with their knowledge and their experience. They want to see you succeed too. And I found out that's a way to win.
Yeah. Yeah. I agree. I think there's a difference though between going and asking for somebody like, what do I do?
Sure.
It's in kind of looking for handholding versus here's kind of what I think is my plan. Like you don't have to have it all figured out. You can still be brand new, but if you at least give them something, show them you've made an effort, they're much more likely to sit down and be like, that's not really how you should think about it. And then they're going to give you some really awesome feedback.
Yeah, no, 100%. Well, I kind of want to pick your brain a little bit here. Also, obviously, long since transitioned to be able to raise capital. You've had a successful journey going more solo. I'm guessing maybe some JVs or just running kind of smaller operations, scaling up to larger capital raising. What's been that experience like, raising capital from that? That's another common question I get. It's like, well, how do I go about that? I've never raised capital before, Kris. Like, how do I even start that? Like,
Yeah, it's a great question. The first answer is always friends and family, especially when you're buying small stuff. You're buying a 4-family here in Connecticut where I live. So you're in Hawaii, right? Everything's expensive there. But let me just put this into context. When I first started, I think I was buying 4-family buildings for $50,000 a unit. So we're talking the $200,000 for a 4-family. It's probably $1 million where you are. But I only had to put maybe 60,000 down. And I'd go out and find 3 people who could do 20K. And that's how I got started. And I would basically do these little joint ventures. They weren't necessarily official syndications. There's lots of ways to do this. I would get them to agree to say, at the time, if you could make 8% in your money, that was really good. So I'd say, hey, listen, John Doe, after getting them interested in real estate. So we're kind of just jumping to how we structure it, but we can talk about all sides. I'd say I'm going to pay you 8% on your money for 3 years. So imagine you give me 100,000. Let's just make it easy. You're going to get $8,000 12 months from today. And then you know what? I'm going to send you another check that you're going to get that 100,000 back. So you're going to make 24,000 bucks free and clear cash, go remodel your house, whatever. And then that's it. And the benefit to me was there's a lot of people who are just kind of sitting on money, would rather make something than nothing. But then once I cashed them out, I had all the equity. So I built this portfolio that was grossing hundreds of thousands a year. And suddenly I'd replaced my job in no time at all. And that's just how I got started. And so I always say, a lot of people say, oh, well, somebody's not going to be interested. How do I know they're going to be interested? Listen, for anybody out there who's doubting yourself, everybody and their dead grandmother has a fantasy about owning real estate because they all know deep down it creates more millionaires every single day than any other business model in the world. And the second you're like, I'm doing this real estate thing, they're going to say, oh, I've always wanted to do that. I just didn't know where to get started. Or I didn't have the courage. You would be amazed. So just start talking about it everywhere you go all the time. When somebody says, hey, what have you been up to? Don't be like, oh, or where were you this weekend? Don't say, oh, I was at the Red Sox game. I'm a Boston, I'm a Northeast guy. You'll be like, oh, I was driving properties. I'm really getting serious about buying multifamily. Even if it's not true, that's what you say just to get a rise out of them. And you'll find people will be like, oh, wow, like, how did you get into that? And you use that response, that interest to say, ultimately to steer that conversation down the path of, a lot of people don't realize that they can pool money together to buy these assets. And you eventually get to, is that something you're interested in? Listen, raising capital, especially on the smaller scale, is really quite easy. When you start to move upstream and now you've got to raise $1 million, $2 million, that's when it gets more difficult. But when I first got started, that was it. And I used my track record as an investor within my local community. It just, by the nature of kind of being all over the place and getting infiltrated into different groups, joining your chamber of commerce, all the things that you can do to become more visible and vocal locally, other business owners will start to talk to you about it too. And now you're meeting higher net worth people. Just, again, it's just naturally happening. And you're building that knowledge and that skill for how to have more advanced conversations on capital raising. But I think we're humans. We love to overcomplicate everything in our minds. It's really not hard. But if you start small and you just get started, I think people would be amazed at how quickly they would kind of move through that growth curve. It doesn't take years and years and years. It can take just a few months. But at the highest level, that's kind of ultimately how it all worked for me. But happy to go deeper on any of that.
Yeah. No, I definitely got I do have some questions for you for sure on the capital raising side, but just to kind of touch on a few different things there. I love that you said about like, well, everybody has a dream of owning real estate. And I kind of have to laugh because it's like, you're absolutely right. For one, most people are just not bold enough to go out and do it. They don't know how to do it. There's no on-ramp for them. They all watch the TV shows, right? So they see the shows. That's super cool. I wish I could do that. So the fact that you start taking a step towards that, you now by proxy are becoming cool like the people on the TV show. And if they are interested and they can invest with you, they now too are cool like the people on the TV show. I kind of have to laugh too. Like as you are meeting, let's say you're out there networking, especially, hey, I'm going to go down to Chamber of Commerce. I'm going to mix it up with other business professionals. There's a lot of business owners who are not real estate investors. They're entrepreneurs. They're business owners. But guess what? Through their businesses, they have access to much more resources. And guess what? Their friends and their contacts are also other business owners and entrepreneurs. And guess what? They're watching the same TV shows. And guess what? They probably also have the same dream of owning real estate. I have this business. I got a couple of locations, but man, I've always thought it was super cool if I could buy some real estate. Yeah. So it's like, it's the same thing. You're still dealing with the same person. Their experience is just different. Their skill set, their exposure is just different. Right. So I love the idea of, hey, keep it simple. Just start the conversation, let people know what you're doing. Right. And you know what, you just don't know what that first, like what kind of conversation.
Yeah, exactly. Or somebody might say, oh, my Uncle Johnny just inherited a bunch of money or sold a business. He's sitting on 10 million. You would never even have gotten that response if you didn't at least speak up. And I always tell people, it's like, would you start a store on Main Street in your town, but never hang a sign? Okay, of course you wouldn't, right? It's like, how would you ever get any business or get any help whatsoever? Like, that's kind of what you're doing. You're trying to grow some business without advertising yourself at all in any form whatsoever. Like, it just doesn't make any sense. Obviously, you're never going to get any.
Yeah. And so simple, but again, it's easy to overlook, right? So we'll kind of we're to circle back a little bit to some of the capital raising side. Right now, we're dealing with a bunch of challenges in the industry, right? And, those who aren't investing in real estate, although it's already trickling down to the end user, the consumer, insurance has become a big issue. lately, right? Even we've seen different articles on different things, right? Hey, everybody sees like rising interest costs, like for debt. Hey, you know what? If you go buy a used car, well, guess what? The rates are double, triple what they were just a couple of years ago. Same thing with home buying. So everybody's experiencing at this point that obviously real estate is not immune to that. Like we have to deal with the same challenges. How are you overcoming or how are you helping walk, let's say, investors through, potential investors through some of those points where they may be a little fearful of, or they just have questions about like, hey, well, what about this? I heard you can't get insurance anymore, like, or whatever. Like, how are you helping investors kind of walk through some of those challenges and how are you overcoming those, let's say with your own portfolio?
Yeah, so that's a great question. I mean, you can't plan for everything. It's no matter how smart or thoughtful or what kind of foresight you have, you just can't plan for everything. I think insurance is certainly one of those things that I'll say it wasn't as obvious as some of the pain people are feeling with. I know I'm gonna isolate Dallas. I love Dallas. Let me just say first of all, it's a great market. If you're it's like any market actually. If you're buying under the right terms, you have the right plan in place, it's a great market. But go back 2 or 3 years ago, you could have pulled public data if you knew where to look into the questions to ask to say, hey, there's this tidal wave of supply coming. It blows my mind every single day. There are so many operators in our space, though, who just, they're used to the cliche, hey, if there's population and job growth, it's a great market, like go invest there. And I got to tell you, supply, and we're learning this. Everybody's learning this who didn't already know. Supply is the great equalizer. It's the kryptonite of the real estate industry. But the point is the data was there. You could have seen that coming and you could have either baked it into your business plan or said, we're not going to buy there right now. Insurance isn't one of those things you could have seen coming. It's on the one hand, nobody really knew inflation was going to drive everything up. And insurance is one of those things that goes up with it. Catastrophes around the US, it's called referred to as cats in the insurance industry. I was an executive in the insurance industry. They're getting more severe and more frequent. And so insurance companies are trying to subsidize costs of all the bad things that are happening in other parts of the country. And so that's a realized expense that you couldn't have planned for. For us, we always bake in about a 5% increase per year. I think it's more standard for folks to do 2 to 3%. Just being in insurance, I know it could be more volatile, but when something goes up 10%, you got to figure out how can we make that up somewhere else within how do you shift your business plan real time in terms of maybe the improvements that you're making to your building, or are there other ways to add additional income streams to offset that? Or do you just have to have that conversation with investors that, or it might dilute returns a little bit, but some of those things are just realities that we all have to face. I think though, the situations that are really causing the pain right now are those deals where folks were leveraging short-term debt. They were anticipating interest rates might have only gone up 2%, and then you got a 500 basis point increase. Those are the deals that are experiencing the greatest pain. And any of the deals that we started to acquire beyond 2020, where the inflation interest rates went way, way down, there was enough historical precedence there to show that we would definitely have a spike. We weren't comfortable taking any short-term bridge debt. So at that point, we either negotiated seller financing with a really long runway and options to extend that later on down the road, or we did whatever we could, even if we got unfavorable in terms that maybe diluted investor returns a little bit. We got ourselves 10-year debt with various financial institutions. And so regardless of what's happening now and how long it lasts, we created enough runway for ourselves over time that we could just wait it out and exit. Now, investors want to hear like, hey, I'm going to get my money back in 3 to 5 years. That's always the goal. But I've at least given us the opportunity to say, we're going to wait 10 years. And at that point, investors, they might be a little bit dissatisfied, but they're happy because we're not going to be forced into a position where they're losing a portion of their principal because we can't refinance at all. So the returns are a little bit lower, but on a risk adjusted basis, they're doing outstanding. If you think about what the alternative outcome could have been. So a little bit of a roundabout answer to your question. I think we always like to focus on the fundamentals that are going to ultimately, at the end of the day, always win out in any economic cycle. Long-term fixed rate debt. And we don't anticipate rent growth during the stabilization period. I think some people project that they're going to get elevated rents from doing renovations to the unit, and they're going to get just natural organic rent growth on top of that. We don't do any of that. We always elevate our expenses ahead of our rent growth. I mean, everybody says they're conservative in their underwriting. We are conservative in our underwriting. I think it's just positioned us to win well over time.
Yeah, no, for sure. And you kind of sharing there, so a number of different things, of course. Conservative underwriting, absolutely. But the talking about weathering the storm, that's a big difference. We were talking earlier about, let's say, residential versus commercial. I mean, for one, it kind of forces you to put things out in a longer timeline. And I've always said, like in real estate in general, like you put things out on a long enough timeline, you win, like period. So like if you're able to
Right.
have long-term stable debt, like which has been like something that's bit people hard. Obviously, people going through bridge debt and not refining in time or not executing the game plan or being too aggressive, let's say with rent growth and all the number of factors, right? That a lot of people who got in just these last couple of years just didn't have the experience, right? To be able to kind of foresee or to navigate and all that kind of stuff. And it was abrupt anyway. But no, that's one thing that for sure. Man, I knew guys that were flippers that were caught mid-project. And I don't know if you had already transitioned out of this, but hey, they're still in hard money and the market shifted. You know what? The run up in interest rates affects your buying pool, right? That affects your buyers.
Yep.
And what does that do? That drives down prices, right? This increases inventory. But again, like we're talking about multifamily, we're talking about commercial versus residential. Well, again, we're just stretching out the time. It's a much more stable asset, right? Much less volatile than somebody who got it. Well, hey, I got 10 flips going on right now. Okay. Well, you weren't underwriting period. You were underwriting for the deal. You were managing the project, not what's going to happen, let's say on the backside. Maybe you had an ARV or something, the target that you were trying to hit, of course, but that was a huge shift for a lot of people. So no, for sure. Like that's a huge one. The debt, of course, like all of that, super smart. I'm sure you're probably taking maybe some trade-offs for lower LTVs and that kind of stuff too. It's a big deal. It's a big deal. And a lot of people are just, again, there's going to be, for those of you guys who are not familiar with the commercials, but there is terminology, there's a learning, I mean, there's a learning curve, no doubt. But this is where it's super helpful to educate yourself, surround yourself with people who are, if they're not operators, that's totally fine. That's going to be a very small subset of the general population, even amongst real estate investors. But surround yourself with people who are investing in commercial. Hey, I'm an LP in multiple deals. Okay, cool. Can I have a conversation with you? I'm curious about that. Right? How do I get involved? And then, I mean, the insurance, of course, it's just been an interesting thing. The nice thing is about some of these markets, I know we were talking about supply and demand and just increased supply coming online and whatnot. Real estate is always hyper local also. So we never, people always ask me, well, you see the headlines like, well, the real estate market. I'm like, well, there's no one real estate market. Like where Kris is at the East Coast and where I'm at in Hawaii, our markets are not the same. They're very different. We just touched on that super briefly earlier. So there's no one market. So even amongst like, let's say a general market, we were talking about DFW, there's even like multiple like subdivisions or not subdivisions, but municipalities, even within that one market. So like, know your market. That was like key for me. But yeah, no, I mean, it sounds like you're doing the prudent thing in terms of helping to educate your investors as you kind of bring them along the journey. And it helps too that you're an experienced operator. I enjoy talking to people who have been through market cycles already. There's a lot of people that have never experienced any kind of downturn or volatility in the market. So I'm 100%, I'm sure that's helping you at this point.
Yeah. It is. It for sure is. I would also just build on a comment. I'll just kind of throw this out there. I think a lot of folks when they want to either be an operator or an LP, they start Googling where's the best place to invest. And it goes right along with your conversation about no two markets are really created equal, but you can win in any market. And so people are thinking, well, all the headlines say go to Dallas. Does that mean that Connecticut's a bad market? Or we've seen a shift in Connecticut's population. Well, I read online that if there's a decline in population, it means it's a bad market. No, but if you pull back the curtain, what you're seeing is there's a large boomer population that is moving to a more fixed income, lower cost of living environment, Florida, Alabama, et cetera. But guess what's growing? The 30-something-year-olds with college degrees who are now moving in, taking over the income. They're in their prime earning years, right? So like when you start to peel back and understand what the data is really telling you, it's one, sometimes it looks bad on the surface. So you can't believe everything you read. You got to truly understand. And two, there are still strategies to win. It might be different, but I always remind folks, like, don't overwhelm yourself and overstretch yourself and think you're going to go compete 6,000 miles away with folks like me, because you're just not. You can compete locally and you can find a way to do really well. You just got to figure out what does it take to win in that market. Your local real estate investors association meeting is a great place to start.
Yeah, no, 100%. I totally agree with that. Very good. Very good. Well, Kris, this, I mean, I say keep having a conversation all day, but it's the point of the show where we transition to something we call our fire round. It's a little more brief Q&A, some fun questions. That's something you're up for?
Yeah, let's do it.
All right, right on. All right, first question. What is your best book recommendation other than Rich Dad, Poor Dad for us real estate investors, the Purple Bible? Do you have any good recommendations? It can be general, it can be real estate, it can be business, capital raising, whatever.
Who, not how. I think a lot of folks are familiar. If you're not, it should become a really important part of your life. I tell everybody, just It's one of those things you read it, you hear it, and you're like, yeah, no kidding, that makes a lot of sense. But none of us are really doing it or as effectively as we can. It's all about replacing yourself and surrounding yourself with other people who can pick up the things that maybe aren't your strengths. Real estate among all businesses is truly a team sport. I think who, not how, will both inspire you, motivate you, and educate you on how to go find other people that are willing to work with you. Just really important. I literally make it a point to at least once a year revisit that book. Usually it's by my fire pit in the backyard with a glass of scotch, and it's just super important. It will really change you in many, many ways for the better.
Absolutely. Yeah. It's easy for us to get kind of bogged down. You mentioned that earlier, right? Like, just kind of analysis paralysis, overthinking stuff. And we think of, well, how can I do that? How can I do that? And it's a good mindset to have if you're coming from, well, I can't do that. But it needs to also transition into, well, who can I connect with that can help me to attack this problem, solve this problem? Now, it's an excellent book recommendation. All right. Next question. What would you consider your superpower is other than having an awesome beard and 29er?
I would say I'm a little bit lucky that communications storytelling is something that I'm good at. And so it's not necessarily something that I'm comfortable with. I would argue that I'm a shy introvert, but
Mhm.
when I remind myself of why I'm doing this, I can get focused, and it's enabled me to raise capital. It's enabled me to early on in my late 20s when I didn't come from money and I didn't have a real estate background to convince people that I was on a journey that was going to take me someplace and the train's about to leave the station. You're either going to jump on board and come with me or you're not. And I'm able to build a vision, align people around it, and get everybody moving in the same direction. So it's really worked in my favor to build multiple businesses and
Mhm.
get three-piece capital to where it is. So I'm thankful that that's a skill that I have.
Yeah, no, it's awesome. And it absolutely is a superpower. It's an incredibly powerful tool that goes back so far beyond who modern times or historical times. I mean,
Yeah.
that's it. That's just something who we are as people, like communicators and whatnot. So yeah, no, that's awesome. All right. Next question. What is the biggest lesson that you've learned over your career thus far?
Oh, wow. That's
I know. Yeah, I know. It's right. It's like that.
well, I'll share a personal
Our
journey. I'm
list.
going to try to keep it short. Sometimes I get long-winded, but
Story, tell me.
when I was 27, I first got started. I left out this little side story. I also started a Ferrari wholesale dealership. So here, that's a whole nother story. But I'm trading Ferraris. I'm living the life as this growing business consultant. I'm flipping houses. I'm making all this money. So I buy one of the most prominent homes in Connecticut on one of the most prominent streets, literally in all of America, 6,500 square foot house. And I went through a series of events where I had some projects that got me in a situation where I was losing some money, flips, single family flips. And I always say the only time I've ever lost money is single family flips. But I also lost my job at the time. And it was just a bad situation to be in. And ultimately, I had to walk away from all of those assets and start fresh. It's kind of the rags to riches, back to rags, and then back to riches story. But I had this time where I started to have it all, and I was certainly living that way. And I was still young. I was 27, 28. And it taught me that you can have it all and it can be gone tomorrow. And so I need to think differently once again about how I invest, how I save, and how I preserve my own capital. But I also realized in that really hard time, like I didn't need a lot to be happy. And so now I'm a minimalist. As I sit here and talk to you, I live in a 900 square foot ranch. I don't have hardly any debt. I don't really think anybody on my street actually knows I'm a multimillionaire because I just live so modest and so simply. And so for me, that was just a huge lesson for me. And it's one that I'm glad I went through. Although I always say I wouldn't trade it the hard times for anything, but I never want to go through them again.
Yeah. So no Ferrari in the garage then.
No, not anymore. There was at
Uh,
one time.
oh, that's awesome story. Thank you for sharing that. Very cool. Yeah. And interesting how you come full circle too, right? And then some of that does come, I mean, it absolutely comes with experience. It comes with understanding what's important to you, what's not. You learn so much about yourself. And this is what I've learned too, like having these awesome conversations with people. It's like, for kind of, don't be afraid to fail, right? Because you wouldn't have learned any of that
Right.
if you wouldn't have stepped outside of your comfort zone, because you could have spent your entire life trying to get, like, let's say the Ferrari, only to understand, you know what? It's cool. And I love them too. But did that give me the satisfaction that I thought that it would? Like, only to find out, yeah, okay, well, that's not, it's it. I'm still missing something else. And I still needed to learn some lessons and I didn't do it. So yeah, no, awesome. Thank you for sharing. All right. And now the next question, what's for the busy working professional, somebody trying to work towards financial freedom, what advice would you have for them?
I would say this, the biggest, obviously real estate, I think should rise to the top of everybody's curiosity list. At the end of the day, I'm not saying you go all in, but everybody should be investing to some degree in alternative assets. Now, the question for you becomes, do you want it to be an active role? You are the one who is purchasing the property, you're managing it, dealing with all the headaches and liabilities, or do you want it to be a passive one? The good news is, with the cost of real estate today, with interest rates are where they are, you could probably, in fact, I'm going to bet my bottom dollar, you'll do much better as a passive investor. And it's most likely a better route for you because you are a busy professional with a family and hobbies and all of those other things that you'll begin to sacrifice if you go the active route. But the point is, just get started, get educated, start small, make an investment, and watch what the power of real estate can do for you. I just think everybody should be invested in alternative assets like multifamily real estate.
Yeah, no, absolutely. 100% agree. We're right alongside there with you. So powerful advice right here from Kris. Well, if our audience wants to reach out to you, they want to get in touch with you, find out more about what you got going on. I know you guys are doing some different stuff, some different markets. What's the best way for them to connect?
Yeah. So, I mean, you can email me, Kris at 3peakscap.com. It's Kris with a K at 3peakscap. That's capital short cap. Or just find me on social media, Kris Morin on Facebook, LinkedIn, give you a chance to get to know me as an individual. You kind of watch me as both a professional and as a person, and you can reach out to me anytime there. I'm super responsive, but I encourage you to reach out.
Awesome. Well, Kris, thank you so much for coming on today, sharing your journey, sharing your experience with me, with our listeners. I've definitely appreciated our conversation, and I look forward to circling back with you in the future. See what
Thanks,
kind of additional success you've gotten.
Yeah. Thank you again for having me. It's really been fun. Thank you.
Yeah, absolutely. I appreciate it. Have a great one. Aloha.
You too.
All right. Awesome conversation with Kris Morin. He's got tons of experience, great guy. Obviously, he's had a very, lots of experience in real estate, sharing, of course, of his journey, being in corporate America, having success in that realm, and also, let's say, on the residential side and flipping, and then ultimately finding what a lot of us will get to, where you want to scale up, you want to solve bigger problems. And now he's obviously able to provide opportunities for investors to kind of partner alongside with him into the commercial space, very similar to what we do, just in different markets and working at a different scale. But guys, if you guys are interested in investing with us and finding out about what we've got going on as well, of course, make sure to go to TriCityEquity.com. You can learn more about our team, some prior projects. We'd love to have a conversation with you. You're welcome to schedule a call with us and somebody on our team, and we would love to answer any questions for you. If you guys are local here in Honolulu, of course, make sure that you're making plans to join our monthly real estate meetup. We talked about this with Kris on the show. One of the most powerful ways that you can get involved if you're interested in starting in real estate is to connect with like-minded investors, like-minded individuals, entrepreneurs, people who are, even if they're just a step further down the road than you. A lot of times it's just that additional encouragement that we all need to get started, to do something a little bit more, get outside of our comfort zone. That may not be so comfortable for you to go to a room full of strangers. We're all nice. Everybody's friendly. Come shake some hands. You'll come into a room full of great people. We always have a great turnout. So make sure that you're making plans to attend the next one. We also do have our conference coming up, the Hawaii Millionaire Mindset Conference. It's coming up super fast, guys. July 10th through the 13th. There are still tickets available. That's going to be happening out at the beautiful Four Seasons in Ko'olina here on Oahu. It's an awesome time. Literally, that's the best conference in Hawaii to come out and learn about entrepreneurship, to be around business owners, to be around like-minded investors, people who are in real estate, who want to get started in real estate. It's such an amazing place, an amazing conference to attend. So make sure that you're buying tickets and making plans to be there. And guys, if you're enjoying this content, make sure that you're subscribing, that you are downloading the episode, you're sharing it. We'd love to continue to get on additional high quality guests. The only way we can do that is if we get that encouragement from you guys. So give us a thumbs up, subscribe to the show, and we'd love to continue to provide value for you guys. But that's going to be it for me today, guys. We'll see you on the next one. Go out, take some action, and we'll talk to you later.